Hello and welcome. You're watching Ask PQ on Bloomberg Quint Live. I am Aga Makil. If you've got questions on equity, this show is perfect for you. Send them to us on Twitter, Facebook, YouTube or WhatsApp, or you can call us on 0224540, and of course also send us mail on askpq@bloombergquint.com. Make sure you do add the AskPQ hashtag. But moving on, let's take a look at the markets. At this point in time, we're seeing about gains of about 0.25% for the Nifty and the Sensex, both advancing by a little over 0.25%. When it comes to your broader markets, perhaps the Nifty banking index at this point in time, the gains coming there. But also mention of the Nifty PSU banking index, which is actually looking at gains of as much as 1%. And we can have that as well. There you have it. And the gains here are on account of recapitalization announced at a little over 48,000 crores for some of these banks. The result of which Allahabad Bank and Corporation Bank will come out of the prompt corrective action framework. And that's the reason why we're looking at a good surge in these stocks. So the banking PSU index doing well in today's day of trade. But moving on to some of your broader market indices, such as the small cap and the mid cap indices. Let's pull them up as well and take a look at how that's doing, because the broader market indices will give you a better idea about stocks just beyond the top 50. The mid-cap index is higher by as much as 0.5% and 0.8% gains for the small-cap index too. So, well, on the whole, it's turning out to be a good session indeed. But on that note, now I'm going to get in our experts of the day. We have Ashish Kelkar of Kiran, Jadhav and Associates, and Sandeep Jain of Tradeswift Broking will join us in just a moment. I'm going to start off by taking a mail query. We have a question from Amit who writes to us on mail. He says this is actually on, okay, it's ITC. Yeah, his question is on ITC February 280 call. That's what he wants to know about. Let's pull up ITC. It's around 270, 275. The last time I checked, yes, there you have it, 274.5. And it's not doing too much at this point, but he hasn't mentioned, okay, he's bought that particular call at 4 rupees. He wants to know what can be done. Should it be held or should it be an exit? Can we pull up the ITC 280 call and take a look at how it's been doing? It's actually, he's making a significant loss because it's currently at less than 2 points in terms of premiums. But it's still a bit away from moving in the money, and especially given the fact that it is, going to be expiry soon. This is around the time when the time decay actually accelerates. But that said, Ashish, let me put this question to you on ITC. Where do you stand on ITC in the near term? Perhaps as far as this expiry is concerned, it's currently at 275. Do you think that there's a likelihood of it moving in the money at 280 before expiry?
Good afternoon. It is, if we look at the chart, it is very difficult for the price to go above 280 and to come in the money call. But yes, there is a chances of bounce back in this particular counter. I would recommend to hold with a strict stop loss of 272.5 on the cash market price, because 272.5 is very important level for this particular counter. If the price goes below this particular level, then definitely there will be another big fall which can take the prices to around 265. So in that case, he would lose all the money. So better to keep a stop loss at 272.5. If this level is breached, then he should exit from the call which he has bought at 4 rupees. If we get a bounce back, then definitely the stock can test up to 280 rupees, and in that case his loss will be at least minimal. So hold with a 6 stop loss is what I would recommend on technical.
Okay, on that note, let's move on and talk about Maruti Suzuki, because that's the next question on our list. We have a question from Krish, and he wants to know what is a fresh entry level for Maruti Suzuki from a one-year perspective. What is the technical view here? Maruti Suzuki is currently at 6,770. It's down by as much as 1.2%. What would you do with this one, Ashish?
See, I would not recommend to go ahead and open a fresh trade on the long side because I'm expecting a further correction in this particular counter. The next level which I can see on the chart is around 6,500. So another 200, 250 points fall is expected in this counter. So this is not the right price to go and buy this particular stock. So wait for the further correction, and when we get the prices near 6,500, that will be the right price to enter because this is the level where the bottom formation is happening. It has tested this particular level twice in the last 1.5 month. So this will be a strong base formation for this counter. So that will be the right price to enter, not now.
Okay. On that note, let's also take a look at Kaveri Seed Company, which has been under tremendous pressure of late. And quite naturally, we will have a lot of questions with respect to whether or not Kaveri Seed Company can be shorted even at these levels. It's currently trading at 421 rupees per share. We have Mayank Mantri, who has bought the 300 put at and it's at 1.5. The question is, what should we do? Well, 300 rupees is significantly away from the current market level, and the likelihood, Mayank, is that you're probably going to see that 1.5 premium, well, deteriorate further with time decay. But I'm going to take this up with Ashish. Ashish, how would you put the probability of making any money whatsoever when it comes to this particular put? Well, Mayank has bought the 300 put. He's paid a very low premium, but does that mean anything at all?
Frankly speaking, no, that does not mean anything because it is two out of the money put that he has bought. The price is not expected to go to 300 levels in just next 8-9 days, 6-7 days. So I think it is better to exit because after such a big fall from a level of around 610, 620 to a level of 420, there is a pullback rally which is expected after a big fall. What naturally there has to be a pullback or the correction of the down move. So definitely this is a risky trade. So exit is what I would recommend.
Okay. On that note, let's move on to the query that we have from Prashant. It's on Tata Motors. And let's pull up Tata Motors. Let's see where that one is trading currently. We need to know what the view is until February expiry, that is expiry next week. Tata Motors currently trades at 167.5. Ashish, keeping in mind the next 9-10 odd sessions, where do you expect Tata Motors to go?
See, for Tata Motors, there is one important level and that is 172. Currently, we are trading at around 167.5. If this price is able to breach this level of 172 on the higher side, then definitely there will be a strong bull run in this particular counter, which can take the price to around 186 before expiry, if the 172 level is breached. So what I would recommend to hold on, and a strict stop loss should be kept at 163 on a closing basis. If we get a breakout above 172, definitely another fresh position can be opened up, and the target would be around 185 to 187.
All right. Well, on that note, we move on to a fundamental query. We have one from Arun Kumar, and I believe that we now have Sandeep Jain with us. Sandeep, good afternoon and thanks for joining us. Arun Kumar wants a view on 3M India. Now, we do understand that some of your high net worth individuals are into this particular counter, but I also know that it's a very richly valued stock. Where do you stand on 3M India, and what would you do with this?
It's certainly a good story. In fact, there are various products and segments this company is into and are very, very richly valued. As you said, the valuations are very rich. So, but still, those who generally invest in these kind of stocks, they generally tend to be, buy only and long only kind of investors, and they never try to even think of, selling them. So for fresh investments, I think I would not certainly recommend at these levels of valuations also in these kind of markets also, because when markets are actually not doing well, so these richly valued stocks might correct with time. So what I feel is one should simply hold on, those who are holding it. But for fresh buying, I think we will wait for some correction of around, say, 19,000 to 20,000 levels. From there, it will become very attractive also, and the risk reward ratios will also be very attractive at that point of time.
Okay, there you have it. That's your view on 3M India. Now we move on to talk about LNT Technology Services. Mind you, LNT Technology Services is different from LNT Infotech. So let's not confuse those terms. But we have a question from Abdesh Notial, and he wants a one-year view on LNT Technology Services, which currently trades at 1486. What can be done here? And there is another question which I'm going to come back to. But for now, Ashish, how do you stand on LNT Technology Services?
See, LNT Technology Services, this stock is in a consolidation zone. And again, there was a big fall from a level of around 1750 to a level of around 1400. And there is a pullback which is going on in the last 2-3 trading sessions. So I'm not expecting a big rally in this particular counter. In this particular pullback, I am expecting the stock to test around 1550 odd levels. But if someone wants to buy for long term, this particular counter should be bought only above 1620 rupees. 1620 rupees will be very important level as a breakout level. And if this breakout happens, then the next target would be 1900. So if someone is holding this particular counter, I would recommend to hold, but fresh entry is recommended only above 1620.
Okay. The other, part of that question was with respect to Reliance Power, of course, and I'm sure a lot of traders out there would be tempted to perhaps dip into stocks which are being beaten down heavily, and of course, the Reliance Power is one of them, as is as are a lot of the other stocks from the ADAG group. Is currently at around 11.2. Ashish, would you want to hazard any position in Reliance Power at this point in time, or would you want to avoid?
I would want to avoid this particular counter because after such a fall, there will be either a time correction or the price correction. So I am not advocating any long position in this particular counter. By looking at the charts, there is a probability of trend reversal pattern only if the price goes about 1220 rupees. Sorry, 12 rupees 20 paisa. So that will be the price for the breakout of this particular counter. And if someone buys about 12 rupees 20 paisa, then the target would be around 14 to 14.5. And that in that case, the ROI will be in a short time and the ROI would be better. So as of now, no fresh buying is recommended.
Okay. And on that note, we move on to another very interesting question, which is on Biocon and Syngene. We have Naveen George, who writes to us that he holds a stake both in Biocon as well as Syngene, but he wants to know if he should actually sell Syngene and buy Biocon with the same amount that he has made by selling Syngene. And of course, his reading of it is that he's not making very good returns on Syngene, and thereby, if it was a good idea to buy into Biocon. Sandeep, interesting question. What would you do in Naveen's place? Would you also carry out something like that? What is your view on both these?
Oh, it's a very interesting question. In fact, one of the first of its kind. In fact, I have been facing this kind of question, and the same question was being asked by me also at one point of time in a public forum, where I asked this question relating to whether we should Syngene was performing at that point of time and Biocon was underperforming. But then, Biocon outperformed Syngene being a very slow moving stock. But then the best part about Syngene is it's in a very unique kind of business. It's not the normal pharma kind of company, like Biocon or Sun Pharma or Lupin or others. Somehow I really vouch for this company, and I have been recommending this company since quite a long time. And the best part is the company is providing contract research and manufacturing services, so biotechnology and all this stuff. So I think, this is a very unique business model, and the valuations are also attractive, not very expensive. And the best part is the risk reward ratio is also very good. And in these kind of markets, one should look at these kind of stocks and stories where, the volatility is also very low and a very dull kind of stock. And because when the markets will move up, these stocks will also go with the markets. But when the markets are actually not doing well, at least these kind of stocks don't correct. So I feel, one should certainly stick to it. And for this particular query, I think I would certainly suggest that, he should stick on to particularly Syngene and rather not opt for Biocon. It's not that I don't like Biocon for that matter, but not The switching part I'm liking, so he should stick on to Syngene.
So because he holds stock in both, you would recommend that he hold on to Syngene as well as Biocon. Do I get that correct?
Yeah, certainly, yes, certainly. He should actually, status quo should be maintained by him and wait and watch.
Okay, fair enough. All right, so on that note, we move on to the next question, and it's on Wadman Holdings. We have a question from Gautam Chopra. Wadman Holdings, again, is a stock that we don't usually talk about. It's not a very liquid stock either. Now its its prices are around 1882, but in terms of volumes, as you can see here today, we've just seen about 102 shares on the exchanges so far. So certainly not looking like a stock which could be considered for technical analysis. But I'm going to take a technical check here anyways with Ashish. I mean, I'm sure he can give us a better perspective here. Ashish, how would you trade Wadman Holdings, if at all? And what levels would you watch out for?
See, basically, as you correctly mentioned, this is a illiquid counter. But if I look at the chart, short-term as well as long-term charts, they are suggesting me a strong base formation at around 1770 rupees. Currently, it is trading at 1880 rupees. So 1770 is very important level for this particular counter. If this level is breached, then the next target which I can see on the chart is around 1360. So there a big fall is expected if the 1770 is breached. So if a person who is holding this particular counter with a long-term view, then hold on with a long-term view with a strict stop loss of 1770. And if someone wants to buy, then I would not recommend a fresh long position in this counter.
All right. Moving on to a question from Ramesh on Minda Industries. This one comes to us on WhatsApp. Well, he's bought Minda Industries at 166. It's currently trading it at 315. He wants a long-term view. Sandeep, he's obviously doubled his money but where do you go from here when it comes to Minda Industries?
See, I think he should hold on to the stock rather than, a fresh buying. I won't recommend fresh buying, at least in auto components at this point of time, because I'm not very bullish on the markets also. Just that the markets have kind of, formed a kind of bottom of 10,600. But then, if corrects beyond that level, it can panic also. And when market panics, then mid caps and small caps and these kind of stocks actually correct a lot. But then I feel that this is a quality company and the valuations are also not very expensive, trading at a P multiple around 27. And the best part is the return on capital employed, return on equity is 25 plus, which I really appreciate. And the kind of growth the company has been showing is around 25 plus again. And the promoters are actually very aggressive also in doing their business. So I feel, he should hold on to the stock rather than switching here and there. Yeah.
Okay, well, there you have it. But moving on to the next question, again, a very interesting one. Sandeep, this one is for you again. We have a question from Bappi Kuri. He says that he's bought Page Industries for 26,000 rupees per share. As we all know, it's currently at just over 21,000 rupees per share. What is a long-term view, say about 3 to 5 years? Before I go to Sandeep, I just want to mention there's one broking house, it's Goldman Sachs, which has actually upgraded the counter today, suggesting that at current price, at least as far as Goldman Sachs is concerned, well, a lot of the pros and cons are now in the price. We also have to remember that Page Industries has corrected over 40% from its peak. And on the basis of that, Goldman Sachs suggests that, it may not be a bad time to enter into the stock. That said, Sandeep, the viewer has a slightly different point of view because the viewer's entry point is at 26,000 rupees per share, but he also has the advantage of 3 to 5 year horizon. Where do you stand on Page Industries and what would your advice be?
Planning to hold it for 3 to 5 years. So, I can certainly answer as a no-brainer answer that, he can hold on to the stock because somehow the stock looks expensive to me. And as I was talking about 3M India, same kind of opinion I do form for this kind of stock also. Again, this is a great franchise, a great brand equity, superb distribution network. But then all these things are already priced in. And even the correction, post the results, the stock went up for a day And then his entry, this particular investor's entry, somehow I won't appreciate, since he's entering at 26,000, he might have seen that, the stock has corrected from 36,000. So 26,000 is an attractive level, but then he should also consider P multiples also, which is around 55 plus. So which is big, which is a very expensive number. So I feel at this point of time, he should hold on to the stock, because at 20,000, somehow I feel that it might find some support, because today also it is trading in green. But after the results, there was some confusion regarding that policy change in their accounting standards. So that's how the market has actually bashed the stock. But then since he is a long-term investor, these are good stories. Somehow I feel that, his price might be achieved, and then he might achieve some extra returns also in this particular stock. 3 to 5 years is a good horizon. He could hold on here.
All right, fair enough. But moving on to the next one, we also have a query on, all right, this one is on Action Constructions. All right, we have, okay, all right, yeah, so we'll take Action Construction then. This one is a question from Sandeep Joshi. He's bought it at 150 and it's currently at 73.5. Ashish, your view here, what would you do with Action Construction, if at all?
See, basically, the chart is completely distorted. It is making continuously lower tops and lower bottoms. And it has given us a breakout of descending triangle pattern formation, which has a bearish implications. And I can see the price could go to around 60 and 58 odd level. So I would recommend to exit immediately. Or if there is a pullback rally, a good rise in the price, definitely exit is what I would recommend.
All right, pardon me, this was actually also a fundamental question. So Sandeep, let me come to you and take your view on Action Construction. If you, track it, what was your view here?
See, as I was telling about mid caps and small caps, these stories actually do well when the markets are doing well. But then mid caps and small caps are actually not performing, and this particular stock was being recommended by a couple of analysts. And then, now the company is trading at a very attractive level, looking at the P multiples also around 13 to 14. Then, the sales growth is also there. Then return on capital employed is also around 18. So all these things are very good. But then, since the stock has corrected from 2004 levels to say at these levels, and it is trading around its 52-week lows. So I feel that, he simply should hold, and he should not think of averaging, because somehow this is not a market where, one should think of even bottom fishing and averaging. The same holds for Page Industries also. I could not talk about that averaging thing at that point of time, but now I would recommend, not to average, simply hold and maintain a status quo.
Okay. On that note, we slip into the rapid fire segment, and once again, I'm going to request our experts to keep their answers as short as possible. Sandeep, coming back to you, your view on LNT Finance and M&M. Sudarshan wants to know which one is a better bet based on current valuations.
It's M&M Financials or M&M?
Yes, M&M Financials.
Okay. I feel that, LNT Finance and M&M Holdings, both are good pedigree companies, but then still, I would recommend something else.
I believe we have a connection problem with Sandeep. We'll come back to that, but let's move on and take a view of Inox Leisure. We have a question from Kakisai Ram, and he says Inox Leisure has been bought at 210 rupees per share. It's currently at 277. Ashish, the question is, will it cross 300, or should the viewer book profit?
The chart is very good. I would recommend to hold on with a 6 stop loss of 271 on a closing basis. It will cross 300 only if it crosses the barrier of 285, which is a very strong resistance level.
Okay, Sandeep, very quickly, you were finishing a point between L&T Finance and M&M Finance. You were suggesting there was another stock which you had in mind.
See, I would rather suggest something else, that is HDFC and LIC HFL. In NBFCs, I've been becoming, very cautious. These two are good companies, but then LIC HFL looks very attractive.
All right. Moving on to a medium-term view on Mahindra and Mahindra. I'm going to take a technical view here. Ashish, what's your view? Pranav wants to know if it can be bought or sold currently on M&M?
M&M, I would not recommend to buy immediately because a further correction is expected, and this correction can take the prices to around 600 and between 600 and 580. This will be the accumulation zone, and then only you should go ahead and buy, not right now.
All right. Okay, I think we've run out of time on the rapid fire segment, so I'm going to take a moment to thank both our experts, Sandeep and Ashish, for helping our viewers with all their queries. That is all that we have on this edition of Ask BQ. Remember, we're just a tweet, a post, or a call away. So keep your queries coming in, and we promise to address them all through our shows. For all the previous episodes, visit our YouTube channel or our website, bloombergquid.com. Stay tuned. Up next is Power Lunch.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive